Good morning, traders. Welcome to your 7-minute market update utilizing technical analysis to predict direction based on human emotion. Today is May 5th, 2013. Lots to talk about, so let's get started. So what I'm going to try and do is get through these videos as soon as I can or as fast as I can so you have time to spend the rest of your weekend not having to worry about what might happen next weekend because I'm just going to tell you what I think as far as what might happen and what the charts are actually telling me. So I posted on my Facebook for 7-minute market that this could be a potential short. Intraday was definitely a short. I had already shorted this market around the highs on Friday, and so I have already a break-even stop in place. Just to let you guys know, I'd already stopped out break even on my previous short. Okay, so that's already done. And as you all know, I'm trying to catch the correction if it ever happens. You guys all know that I've been talking about a correction possibly happening for a while now, and it has not happened. The markets just for some reason keep pushing higher and higher. It's not really for some reason. We all know why the market keeps pushing higher and higher, and it's because of the manipulation and the printing of money. Obviously, that's what it is. And when the feds come out and say we're going to just keep printing money and we won't stop printing money until the economy gets better, traders like that, and they keep putting money in the markets. However, this is, I don't know if the right word would be unsustainable, but it would be, how should I say, a very dangerous thing because we keep moving higher and higher without correcting. It's not very healthy for the market. So I'm going to say that I'm neither bull nor bear simply because it does look like a dangerous trend higher. The trend hasn't changed yet, and that's obvious because we also created another higher high here. That's at the 161.88 level. I am not bearish either because every time the feds come out, they're going to say, well, I'm going to print more money until the economy gets better and the market goes higher because the market goes inverse to the US dollar. So what am I trying to say? Well, this is what I'm looking at now. Right now I am currently short simply because we have a doji candle here and it's up into this upper trend line here. I already have a break-even stop, so even if this market continues higher on Monday, not a big deal. I get stopped out break-even again, and I wait for the next shorting opportunity. Will I go long every time we have a pullback? Probably not, simply because again, this market, as we all know, experienced traders will tell you, um, not just myself, but the markets cannot just continue higher without correcting first. I mean, you just need, it's just healthier to have a correction. I mean, that's just the norm. And right now, the norm is not happening. So I'm going to give you two different scenarios, and it's 50-50. First one is, which is what I am, is the bearish. And when I say bearish, I am short term. So when I say neither bullish nor bearish, what I'm saying is more on the longer term side. I'm not bullish or bearish, meaning I don't know if this is going to be the correction that we're looking for, or this could be the reversal of maybe the start of a correction. I'm not saying that. What I'm saying is we need to look at the charts, or I need to look at the charts, and I need to make trading decisions based on what the analysis is telling me and not based on what the news is saying. So with that said, I was forced to, because we have to treat this like a business, like we have to be like computers. When we have a good resistance point here, you initiate a short. You put a break-even stop, which is what I'm in now. If it continues higher, you get stopped out break-even. At most, you take a small loss in case it gaps higher, which I doubt, but that is always a possibility. And you wait for the pullback, and the pullback would probably go right into the 157 level and potentially bounce higher. Maybe this time into the 165, and that's if we get a pullback on Monday. Now here's a couple of things. So the bearish side, and when I say bearish again, I mean short term, and I will talk about the bullish side as short term as well. Okay, so we have this uptrend, so the trend hasn't changed, but we have this what you call some sort of similar to a spinning top, but more of a doji candle here. We're up into this um, upper trend line here. This is going to have some resistance, okay, but doesn't necessarily mean that we're actually going to get a pullback. Okay, we also gapped higher, which is an interesting move, especially after we've just been continuing higher here. But if you look at this, this could be definitely considered as a consolidation pattern, some sort of flag, and then we just popped higher. Now, so I know I'm going all over and you may not be understanding what I'm saying. What I'm saying is there's a possibility we could have a small pullback and head lower. But this is the reason why I think that there's also a possibility we could head higher. If you just draw a line straight across like this over here, right? Just like this. This is a sideways pattern over here. Whenever you have a sideways pattern, like this sideways pattern here, and then you get a breakout, boom, just like this candle on higher volume, just like this candle here. Let me just kind of lift the volume up here. We have a lot more volume over here, and then we have a breakout of this sideways channel here, as you can see this. Okay, after we broke out of this sideways channel, we created a bigger channel. Okay, and then before even coming down, we just already broke out of this bigger channel here on higher volume. Now the volume wasn't that much higher, but it was definitely higher than the past few days, which means that there is a potential, a good potential, in fact, that we could also head higher. So it is 50-50. The signals are reading 50-50 right now, where the bearish side is showing, if I just draw a line right here, some resistance there, and we have a kind of like a doji candle here, and the bullish side is the breakout of the sideways pattern. Okay, and it's on higher volume. I would have to say that there is a possibility that we might get a small pullback on Monday, but being that Monday is notorious, a notorious day for being on the lower volume side, there's a possibility that we might start floating higher, but that remains to be seen. Now, so I'll leave that up to you to decide if it's going to be short term or long term, bullish or bearish, but this is just what I'm seeing now, and I'm telling you what I am in the market, and that's I do have a short initiated. I do not, even if, let's just say, even if this was a breakout, okay, let's just say even though this was a breakout and this was a signal for a breakout, would I actually take a long trade here like this one did? Absolutely not. As you can see, if I had taken the long trade here, my profits would have been very tiny, right? If this was the breakout of this channel, it did go higher, right? But it wasn't that much higher before I started pulling back again, right back into the 154.10 level. Okay, so again, what I would wait for after any breakout is 3 candles, 1, 2, 3, and wherever that goes, then some sort of reversal candle here, or if it reverses on its own, that's fine. And then as it comes down into support, this is when I would take a long trade right here. Okay, because if I took a long trade here, I'd be chasing, and chasing is just not what I do, not anymore at least. I used to trade when I was chase when I was younger, and sometimes it worked out great, and sometimes it just didn't, and it wasn't really a profit, money making, thing. And so I decided that I would wait for the retest first before initiating any type of trade, and then that way I can keep my stops very limited and very small. So what do I think? If it is bullish, and this is in fact a breakout, and it did happen on higher volume, okay, a possibility of the 165.80 level is more likely, okay, or there's a higher likeliness, and it's only $3 and so cents away, like $3.40 away, and it's not that, it's not that much the way the markets are going up a dollar half every day, that kind of thing. We also have this upper trend line over here. I know we talked about this in the previous videos. Let me see if I can just zoom out here. This trend line comes from way back in the years. See, from 2010, so a couple years ago. So this trend line above here is telling me that we're going to have resistance there as well. So if we can get to the 165.80 level, let's just say we can get there. Let me just make this a little bit nicer here. Let's just say we can get to the 165.80 level. I may actually wait till we get here before initiating a short, or what I would do is initiate a short at the 165.80 level, and then stop out if I get a close above this upper trend line. Now here's the thing, and that it really depends on what pattern this thing makes. I mean, if we go up and then we start consolidating under the 165.80 level, then there's a potential that we definitely would hit this upper trend line, in which case I would wait for this trend line to be hit before taking a short trade. But if we go straight in to the 165.80 level, like we keep going up and up and up this week, then I'll initiate a trade at the 165.80 level. So it really depends on the pattern and what it looks like. Now, here's the thing. That's short term, and no, again, I will not, chase. So let's just say this guy goes up just a little bit and then comes down to retest, and I think it has a chance of getting to the 165.80 level if it's able to get some support off of this line over here. If, however, we go straight into the 165.80 level, then I'll initiate a short. So there's two different scenarios. We come, we retest, I'll go long. Okay. We go all the way up into the 168 level, like so. Then I take a short. Okay, and then the short will be all the way down to the retest of this level here, and then I take a long trade. It's as simple as that. Here's the thing, and I keep saying sorry about that. Long term or longer term, I wouldn't say long term. I don't like to trade long term, but longer term instead of the real short term. Short term meaning a day or two. The long term is this. If overall, what I'm gonna tell you now, I'm not changing my mind. I'm not, saying that I'm now bullish and all of a sudden I'm neither bullish or bearish. The longer term, I think that this market again, and I'm not being stubborn. It's just technical analysis. It's what it is. We need to see a correction in order for the markets to stay healthy. If we have an unhealthy market, then we'll continue higher. But the higher we go, the more unhealthy the market will be, and the bigger the correction should be. Okay, and that's obviously just my opinion. It's up to you what you want to think of it. We do have divergences in the ultimate oscillator, divergences in the MACD, divergences in the RSI. The divergence is, just as an example over here, this is the daily chart, obviously, but we have lower moves here, but yet, if I just grab the day that to the point of this, we're actually making new highs. So we're making lower lows, and then we're making higher highs here. So that, you can find that on the MACD, you can find that on the RSI. Almost all the oscillators will have the divergence in there that I could find, and that's telling me that eventually this guy's going to want to pull back and correct. Okay, so just because there's a divergence though, I just want to keep in mind, I rarely play divergences. It's more of just a warning for me that this run should start dying out shortly. Okay, and it really depends on if the feds want to save it. Sometimes the feds won't be able to save it if you keep on saying the same thing over and over again. It's almost like crying, well, not crying wolf, but if you just keep on saying that I'm going to print money, print money, print money, eventually, all that's going to get old. People are not really going to care about that anymore, and then they're going to start selling off, and then we'll see our correction. So tomorrow, what we'll need to do is close above the 161.88 level, meaning we will need to make literally another high in the SPY in order to validate that this move is accurate. Okay, if we close below this trend line over here, this breakout, if we close below this breakout here, then we're still in a short-term, we will still be in a short-term bearish arena. So what I'll do is I'll keep posting on Facebook, letting you guys know and updating you throughout the week what I see when there's weird things like that. If I don't see anything weird and everything just goes as planned, and as we discuss on these videos here, then I'll just keep quiet until something big happens, and I'll post something, like screenshots and stuff on the Facebook page. But as of now, that's what I'm watching out for. If we get a close above this candle here, I'm thinking we could potentially get to the 165.80 level. If we pull back before we get to the 165.80 level, then I go long on this support line over here. And if we go straight into the 165.80 level, then I initiate a short. And it's as simple as that. Right now, I am in cash. Well, in cash as in the bigger moves. Right now I am short, but I have a break-even stop, and I just don't know what's going to happen. I could get stopped out break-even on Monday. Like, I never entered the market, and that's why I like playing the break-even stops, and it keeps you safe, from the market manipulation that we have in there, have out there. When you have technical analysis telling you to go one way and you go that way, and initially you're correct, you do not want to lose money. Once you're making money, you don't want to lose money, and that's, obviously that's my opinion. and we're already into 15 minutes, which is pretty good, making pretty good time here. So that's it. If you guys want to continue watching this video, feel free to. I'm just going to get into some gold maybe and talk about maybe the dollar. Let me just take a look at some charts and see what's out there. I'll be right back. If not, then this is all that I'll probably talk about on the SPY. Alright, the next thing I want to talk about is the UUP, which is the US dollar. And again, the dollar is inverse to the markets. It's not tick for tick, nor is it penny for penny. But in general, if the dollar goes down, then the market will go up, and that's just how it's been for a very long time. It doesn't happen 100% of the time, just keep that in mind, but it's a pretty good indication. 90% of the time it will follow inverse to the market, so that's just something that I like to keep an eye on. Right now, on the bigger scale, let me go to the weekly. All right, on the weekly chart on the dollar, I know we discussed this in the previous videos. I don't know if it was just the most recent, but we have discussed this. And right now, um, it's kind of just the dollar is just, in my opinion, just going sideways. But a little, if you look at it in a smaller way, starting from this year, we moved up on the dollar, we consolidated, all right, and then this consolidation almost broke down. Okay, let me just see here. We can just draw it pretty much just like that. We almost broke down from this bottom trend line over here. We went right into these two moving averages, which is going to give this dollar a little bit more of a little bit more strength, okay, if you will. Now, the volume on this past week was higher than the past previous weeks, which is good. And we have a doji candle, so there is a possibility that we may push higher on the dollar. Now, the 200 moving average is just right above it. Okay, and that's going to give a lot of pressure on its upward move. So we've hit it once, twice, three, four, and then five, and then now we're back down on the bottom of this so-called flag, if you will. And now if we start going higher and we are able to close above a close above the 200 moving average, then that will show some strength in the dollar, in which case will show a lot of weakness in the markets. And so that's just something that you might want to keep your eye on just in case. Now this is the weekly. Let's take a look at the daily. All right, now this is the daily chart of the UUP. Now just keep in mind that the 10-minute chart is trumped by the 1 hour, and the daily trumps the 1 hour, and the weekly trumps the daily, and so on and so forth. I don't look at the monthly those because you just never know what's going to happen in a month. The biggest time frame I normally look at is the weekly, but in this case this is the daily chart of the UUP. We went right in down into the 200 moving average. This was the second time we hit it before getting a bounce, but we have some pressure on the 20 and the 50 moving average, just hovering over it like that. So we could potentially pull back again on the US dollar, which is going to be short term, obviously, because this is the daily chart. But in any case, if we are able, and again, this is what you want to keep your eye on, if we're able to close above the 50 moving average, then that's going to show some strength on the UUP, in which case we'll show some weakness in the market. So that's just something you want to keep your eye on. And this is the chart of the GLD, which is the ETF that tracks gold. All right, so you can rewind the videos if you want to, but I forget what day. Well, here obviously I made this calculation here, the 142.88 on the day of the 12th of April 12th. Okay, so if you rewind and watch videos from April 12th, then you should have seen somewhere between there and here I created this 142.88 level. Okay, this 142.88 level is a mathematical calculation that nobody else has. In any case, that should have given some resistance. It did that intraday. Alright, I told you guys I was short on the GOD. The very next day we popped higher, stopped me out, break even, no big deal. And now what it looks like it's doing is just consolidating right under the 142.88. You can see it's just a ceiling. Boom, boom, boom. It's almost like you can't break out of the ceiling. But now that we're just consolidating right under the 142.88, there is a possibility that we could break higher on the GOD. Right now I am not taking a trade, either long or short, on the GOD. I'm just watching to see what it's going to do. But I just wanted to show you how well this that calculation worked for the GOD. And what was I going to say? Hopefully I can get you more calculations like this on other charts. But for now, any other chart for individual stocks and stuff like that, what I'll do is probably post it on the Facebook page instead of putting it in this video. That way this video isn't too long. Right now I'm into 20 minutes, so I think that should be it for now. If you guys have any questions, let me know. And again, thank you very much. I really do appreciate you clicking on that like button, taking the time out of your day to watch these videos, and just all those awesome comments that you guys post really helps me to continue on continuing this video thing on a weekly basis. In any case, God bless you all. Good luck to your trading next week. Hope to hear from you soon. If not, maybe I'll see you on Facebook. And if not, then hope to see you in the next video.